Is Bitcoin preparing for yet another red September? Let's go ahead and find out. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having an excellent day today. In today's video, we're going to be going over two things. Number one, the short-term price action and exactly what to expect. And number two, the probabilities of a red September. And if we see a red September, based on historical data, how low can that take us? Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and of course, the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency, with Bitcoin, and of course, with the relevant economic news. If you are interested in joining our VIP channel, we post trading signals with exact entries, as you can see over here, exact targets, exact stop losses, and trade justification. We have over 600 members in our VIP. Not only will you get access to our trading channel where we post trading signals, you'll also get access to our group chats, our general chat, our trading chart and education chat, our trade setup chat, our video chat, our news chat, and our help chat. If you are interested in joining all of that, go to the free channel and express your interest by contacting me via this message. Let's go ahead, guys, and jump into the video because there is quite a bit to discuss today, and today is a very interesting video. So, starting on the market data, how are we currently looking? We'll refresh the page. For the 24-hour volume, we are up 19.89%, sitting at 27 million. 27 billion in 24-hour volume. So still relatively low as we are coming out of the weekend now in America. Looking at the 24-hour liquidations, we are up 45%, sitting at 17 million. Still relatively low for liquidations, with a pretty large amount swayed towards those short positions, but still very evenly split. And overall, 17 million liquidations is relatively low. Moving back over to our volatility index, we can see the volatility index on the 30-day period is still pushing sideways, and the 60-day period is still pushing downwards. In fact, the 60-day period is sitting at 1.46, the lowest we have seen, guys, since 2016 in October. So very, very low volatility, very low volume in cryptocurrency as a whole, preparing for a pretty big move. DXY is coming up and retesting that level of resistance. You can see we've opened up red underneath that level of resistance, which could provide some temporary relief if it rejects for the markets this week. And of course, as you know, we have about 3 to 4 days left of the month. So it's going to be very interesting to see how the market responds moving into a monthly close and monthly open. But for the argument's sake, to keep it simple, if we do see the DXY reject here, and of course resistance is resistance until it is not, we are likely to see a small little pullback down to around 103 to 103.4, which could provide some short-term relief for a cryptocurrency and Bitcoin and the stock market. This could result in a short-term rally for both these asset classes, but we can't expect it to be too large. If, of course, the DXY ignores this resistance and says to hell with it and pushes upwards, we do expect a move into this upper level of resistance at 104 to 105/106. This level over here will, of course, be the major high time frame resistance. If we push into this level, we then expect a further continuation down for stocks and for cryptocurrency. Of course, if we break upwards over here, we can definitely expect Bitcoin to push downwards into this lower range. Excuse me, I'll go ahead and delete that. Down into this lower range, which will be 25.8 to 25.88 level. Okay, moving back onto that chart, guys. Finally, if we do break above, there's a long-standing resistance, right? This is going to be an 8 to 10 month long resistance. That is when the bulls fully start to panic, okay? If we lose or break above this level, the bears are really taking control in the higher time frame, and that could throw us into a macro downtrend for both the stock market and for Bitcoin. Very scary stuff breaking above there. Moving on to the stock market, as you can see, we have pretty much done exactly what we expected over here. We got our rejection at the top of this channel. We broke down, we came up to retest this level of resistance, we have rejected, and now we are still targeting this lower area of confluence. Confluence being the point of volume support at 4,300, which we can go horizontal across to our horizontal support range, which is indicative of this horizontal red box, and of course the uptrending support level represented by that diagonal line, which marks the uptrending trajectory of price action over the course of about 10 or so months. Again, a very critical support confluence, if lost, will trigger a macro downtrend for the S&P. Moving on. DXY, not looking too shabby over here, guys, but obviously not looking too good. Support is support until it's not, and therefore we do have to assume support can hold, and we could see bounces again. Not looking healthy until this level of 35,000 is cleared. Until then, we are expecting a breakdown and continuation downwards. So overall, guys, nothing looking too amazing. In fact, everything's kind of on that knife's edge. We're in that weekly downtrend for Bitcoin. The stock market's still in an uptrend. The Dow Jones still in an uptrend. DXY breaking into that weekly uptrend, breaking into that monthly uptrend. It is about to crumble, and it is looking very, very delicate for these asset classes. So we start to see more strength on the dollar. We could potentially see these trends develop into high time frame downtrends, which of course would eradicate the uptrends that developed over 2023. Very, very bad. That's not saying we're going to new lows, but it is saying we do have to be very wary and very aware of that, as we have been ever since Bitcoin retested at 31,000. Let's go ahead and jump into Bitcoin, guys. So much to talk about. Starting on the high time frame, I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Then coming back to the small time frame, but before we do that, we do need to identify one really important thing. First and foremost, I want you to remember these two ranges. Range number one, 25.8K. Remember that. 25.8K is the short-term structural support of the current horizontal range. Very important to remember, because it's going to be relevant to our next analysis on the high time frame in just a moment. 25.8K. And number two, 24.4K is the high time frame horizontal support of the current high time frame horizontal range we are retesting. Very important. So let's go ahead and discuss the macro charts. We talked in the start of the video that September is historically a red month. We've gone through on the monthly and daily chart over here. We've marked down every single September from the start of Bitcoin to now, and we've gone ahead and done a quick analysis, and we found out that the average drawdown for September is 5.43%. The average loss in September is 5.3%. Furthermore, out of the 13 months, there's been 10 red months and 3 green months, which brings us to around 75.6% probability that September is going to be a red month if we base our analysis purely off historical patterns. So if we're going historical patterns, there's a 75% plus chance that September is going to be red. And if it is going to be red, the most likely drawdown we're going to see is going to be negative 5.3%. We'll come back to those numbers in a second. If you take a look at these, the last 7 or so months, the last 6 or so years, we have seen red drawdowns for Septembers. If we go further back, we saw 2 green ones in a row. This is a 2016-2017 start that bull run into the bull run. We of course saw two more red ones over here in 2013, 2014, 2015, and of course we saw a green one back in 2012, followed by two prior red months. A pretty aggressive red month over here, but again, that was that bear market correction. So what does this all mean, guys? Like I've said already, it tells us two things. Number one, the probabilities on historical data that September is going to be red is 5%. We'll go ahead and write that down as 75% chance. Okay, we're going to see a red month based on historical data. And if we see a red month, according to the average drawdown ratio, we're expected to see a 5.43% drawdown for September. So where does that take us? If we go down to the smaller time frame over here and really go ahead and zoom in, you can see we've gone ahead and marked out those two key levels I told you to remember. The 24.4 level, which is going to be marked by the lower range, the lower sub portion of this horizontal range, all right? That 24.4 level is the lower range, and the 25.8 level, which of course is this white line, the lower range of our current horizontal consolidation. Knowing that if we see a red September, we're likely to see a 5.43% drawdown. If we apply a 5.43% drawdown from the distances of 25.8 thousand, we'll go ahead and plug it in, 25.8K to 24.4K, that gives us a 5.3% drawdown. That is no coincidence. That's actually quite surprising that it lines up to 0.01% correlation or equal to that percentage drawdown. I'll go over it again. The average drawdown for September, according to 13 months of data in September, is 5.43%. The distance between the lower support of the current short-term range, okay, the short-term range support, and the distance between that point to the lower range of the high time frame support of 24.4K is exactly 5.43%, which is exactly the average drawdown we expect based on historical data. What are the chances of that, guys? I don't really go on fractals too much. I don't really trade based on historical averages too much. It's not really something I'm going to be utilizing in my own personal trading, but it's very, very interesting that it lines up almost identically to that average drawdown ratio. And you're probably thinking, well, did you change the data to match that? In fact, I actually did the opposite. I calculated the drawdowns first, and then I had a look at the charts, and then I noticed that 5.43%. So I didn't even have any bias. I didn't even go searching for that. It just magically popped up when we were doing the analysis. Let me know down in the comments what you think. Do you think September's going to be red? Do you think 5.3%, 5.43% is realistic? I actually do believe so. If we do take a look at that higher time frame, we can see that 24.4K level is not just a random number. In fact, 24.4K is a number of massive significance. It marks the top points of these last two breakouts. It marks a horizontal range of compression and of course resistance and support over the span of our 440 plus days. Okay. Furthermore, if we go back to this chart here and we chuck it on a weekly chart and bring up the Gaussian channel, it actually also marks, look at this. It also marks the horizontal consolidation point, horizontal level of confluence, which is a 24.4K, lines up perfectly with the green band, the midline of the Gaussian channel. It perfectly lines up, an incredibly important area of support. In fact, if that level is retested, it is going to be a massive, massive point of significance. If we break below 24.4K, technically, we deviate below this entire cluster of price action that we've been within since March 2023. Therefore, a downtrend will commence below. This is when we enter a high time frame monthly downtrend, right? We are in a weekly downtrend currently as we're broken below this uptrending support. This is a weekly downtrend, okay? This will be a monthly downtrend if we lose 24.4. So not only is 24.4 the Gaussian channel midline, not only is it the horizontal support on the high time frame, not only is it going to be the confluence point of support, but it is also going to be the bullish slash bearish trigger point, more importantly, bearish trigger for a flip between a weekly to a monthly trend if lost. And the average drawdown in September tells us 5.43% is a likely ratio. Mind-blowing, guys. Pretty impressive, pretty crazy stuff to be thinking about. Let's go ahead and jump into a smaller time frame. So if you watched yesterday's video, you would know we were in this horizontal range, and we are still very much in the same horizontal range. And if we take a look at these ranges, we can see two things. Number one, the price action above over here, and number two, all of our cool little indicators down the bottom. First and foremost, we need to identify the most important things, which are the structural levels. If we can take a look at the price action over here, we are in a horizontal consolidation, meaning we have a neutral sideways consolidation after or what precedes a large correction toward the downside. When we see these large corrections, the direction of entry into the channel is a direction of exit out of the channel. Therefore, if we're taking a look at the measured move, or more importantly, the directional move of this channel, the most likely scenario, according to historical price action, is a move down. That is the most likely. That has a greater probability. It's around a 14% higher chance. If we look at historical price patterns, and you can go onto pattern sites and take a look, thousands of patterns have been, recorded, detailed, and they've given you breakdowns of the probabilities of directional moves from these patterns. It's around a 64% chance of a breakdown from these kind of structures, which gives you a 14% chance in favor of a breakdown over a break upwards. So again, it is slightly more probable we break downwards over here, but again, 14% really isn't all that much in the grand scheme of patterns. It only really matters when you're taking a large group of patterns, and then the 14% makes a big difference. But any singular pattern, 14% chance isn't really something too significant, but nevertheless, a slight advantage towards a breakdown. If we take a look, the trigger for the breakdown is going to be our loss of support, which is 25.8. A loss of 25.8 takes us into this next horizontal level. The next horizontal level is 25.2 to 24.4. We already discussed that. That is going to be our support / bearish trigger. If we break upwards, we have our resistance / bullish trigger, which is going to be sitting at 26.3K. If we break above that level, we can expect a move upwards to retest the same level of resistance which we broke into before, which is going to be another level of resistance. If we break above 27,000, we do expect a move upwards to retest, okay, the 50 EMA on the daily chart. I'll say it again. If we break upwards from 27,000, we expect to retest the 50 EMA on the daily chart, which is around 27,550, okay, represented by this red zone. If we take a look at the current price action and refer it to our diagnostics or our technicals below, we can see open interest is still falling. In fact, it is gradually dropping, but it is overall falling. With falling open interest and sideways price action, this is very indicative of a neutral consolidation. This is neither bullish nor it is bearish. It is representing the strength between buyers and sellers right over here is very much equal. Remember, open interest is not a predictive analytical tool like momentum. It's not predictive, it's descriptive. It's telling us the strength and what the actions between buyers and sellers are doing in relation to the differences between these, okay? So when we see falling open interest and sideways price action, it's telling us that the overall strength, the overall pressure in this structure is falling, the volatility is falling, volume is falling, indecision is building. There's not a lot of decision in this range. It can very much go 50-50. If we're looking at predictive indicators, we need to use our CVD, okay? And we need to use our momentum, our RSI. If we take a look first and foremost at the CVD, we've actually revised our CVD a little bit. We want to see a break above these local top points to reflect a significant shift in buying pressure, okay, in relation to the entire structural resistance we have seen over the last 20 or so days. This will be incredibly bullish. If the CVD breaks upwards through this level, that will push the prices upwards, okay? Well, again, these will generally happen at the same time as another. The CVD might jump up a little bit sooner, but if you see the CVD jump up a lot sooner, that could be a good indication the price is going to rise upwards. Until then, resistance is resistance until it's not, and we are still very much bearish under that level. If we take a look at our momentum, our RSI over here, just going to go ahead and quickly adjust that line, delete that line. We can go ahead and draw our horizontal level in here. If we see over here, the RSI is actually broken down. It's currently breaking down, and the breakdown of the RSI is only really confirmed after a pivot. So if we take a look at the RSI, what it kind of works as, it works in pivots, meaning you have the candle of the price action. It can go up and down, and we don't really have that locked in price until the candle closes, and then it will close, the RSI will lock in place, and then it will pivot from there again. So we are looking at the pivot, or the point of which the candle closes, to mark these lows on the RSIs. If we're taking with the RSI over here, we have actually broken down, but we do need a confirmed breakdown. So 1 hour and 23 minutes remaining until the RSI actually breaks down and closes below that level. If that occurs, that will trigger a negative momentum shift, and thus the probability of a continuation downwards will increase. Okay, it will increase. That is something we are looking for. Now, if all of this plays out very quickly and we break down, we go downwards, guys, we go all the way down, say we hit, hypothetically, in the next 3 days, say we come down all the way to 24.4. If we take a look at September again and the historical drawdown percentage ratio, if we assume a drawdown of 5.43%, okay, from 24.4, where will it take us? I actually haven't had a look at this yet, so I'm going to go ahead and find this out for myself. If we take a drawdown of 5.43% from September, that would take us around to just above $23,000. Is $23,000 a key area of significance? If we take a look at the VRPV range, it does show us a little bit of a peak around that $23,000 range, so it could be an area of significance. In fact, the $23,000 range is, of course, marking this local top point a little bit lower than its local top point right over here. So it could be an area of significance, but again, it is not what I'm really looking at. I'm really looking at that 24.4K level. Anyway, guys, I hope you enjoyed today's video. I hope you learned something. If you have any questions, leave me down below. Let me know what you think about September. Do you think September will be red or green? Let me know. I'm interested to hear your thoughts. And I'll catch you guys in the next video. Cheers.